Hello and welcome to today's NinjaTrader ecosystem event, Efficiently Trade Supply and Demand Imbalances. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for our free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You could get your free demo account by following the link on the screen. Before I turn the mic over to Will, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Will.
All right, excellent. And thank you so very much. As always, guys and gals, it's so wonderful to be here. I really appreciate the kind introduction. And moreover, just in general, the NinjaTrader ecosystem. It is always a pleasure working with you also. So again, thank you. And that goes for the entirety of the ecosystem, that, being all of you, everyone who's here today, both with NinjaTrader as well as you home gamers and so on and so forth, right? So thank you for taking the time. I hope today is most advantageous. I, for one, am extremely excited. I'm going to get out. We're going to do a little bit of education. And, we'll kind of get through a few of the things really quickly. I'm very excited to get directly out to the charts. We have been able to progress and advance over many, many years. We've been doing this for a very long time, well over a decade. And we just continue to attempt to advance, if you will. And that's exactly what we're going to talk about today. So let me go ahead and start sharing my screen. And I really don't want to be redundant. If you could just do me a favor, maybe type into, let's see, let me get the chat back up. There we go. So, hey, if you would do me just a quick, a solid favor there, if you don't mind, let me know what you see. That would be most advantageous. Okay, perfect. Got the disclaimer up. Okay, so like I said, I don't really want to be redundant with that. It's obviously very important, being, of course, for educational purposes and informational purposes only and all that. But you did such a wonderful job. I'm not going to reread what has already been read. You're welcome to read through that in its entirety at your convenience, however, as it will be on the recording if provided. Okay, so what I'm going to do really quick as we're getting started, I'm just going to go ahead and put some, you might notice in the chat, what I just did is I put some links in which you can reference throughout the session. Now, specifically, I want to bring your attention to the second one, PFA free events. The reason I'm doing this right from the very beginning of the session is because we are going to have a follow-up session tomorrow. And it's very important that you go ahead and get registered for that, because the emails are going to be going out following this session. And so I just wanted to, like I said, put that up right from the beginning. So if you will, just go ahead and get registered for it's not, there's no cost or anything like that. It's just free. And like I said, we're really, all it does is put you on our email list where when we send you invitations to join our free events, things like that. Maybe we update you with the latest and greatest, if you will, of our software or something, but ultimately that's all that is. Okay. And then you will receive an invite to join tomorrow's session, where we will go extremely in depth. And trust me, when I show you what we have to show you today, you'll understand why we do these follow-up events. They do take quite some time, but we never leave. We sit there until all the answers or excuse me, until the questions get addressed. Okay, so let's go ahead and get to it then. As I said, just go ahead and maybe reference that, or I will reference that second link. But if you go ahead and click that, just do me a favor, go ahead and get registered as quickly as possible. I'm not trying to rush into it right this very moment. Go ahead and do it, but just sometime before the end of the session, because the emails are already set to go out. And if you're not on the list, you will not receive those emails. So, all right, here we go, folks. Pure Financial Academy, welcome. And I, again, appreciate you all being here to welcome us and give us the opportunity to speak to you a little bit about PFA, guys and gals. We're an online community dedicated to supply and demand trading concepts. That terminology is very vague and generalized. I get it. We really focus on price action and simplicity. So if we can just kind of leave it at that, supply and demand zones and things like that is of course at the utmost of what we do, but there's just so much more to it than that. So maybe I should rephrase that at one point. Okay, but so PFA has provided training materials and software to individuals looking to learn about trading since about 2009. So as I said, it's been well over a decade now. We believe in the power of having others there to support you and ourselves as well, right? We all want to be on the same path. Our mission is to provide a positive and effective, very effective environment for traders and investors who wish to utilize supply and demand trading methods and share their experiences with others as a team. So with those links that I provided, if you note that top one there, that's just our homepage. Feel free to click that at your leisure. Below that is our contact email, support@purefinancialacademy.com. You can do all that from the website. And I won't spend too much time on that. Let's go ahead and get out to it. All right, so we're going to first, as I said, touch on a little bit of education, supply and demand imbalances. Now, these are not going to be, this may not even be something completely new, to you. You may have done tons of YouTube videos. Trust me, I know when we started this didn't even really exist as far as the YouTube videos and things like that. Of course, it's existed for forever, but suffice to say today, you can do a quick search and I mean, ultimately you can find 50,000 different videos and marketable types of material and so on. So that's great. It's a good thing. You're getting a lot of information. And I encourage everyone to do that. But I would just like to encourage you to focus in on what we're going to talk about today, because this is really important. And it's also very simple. There's really only two different things that we're going to talk about as far as the education goes. And when we're actually going into trading and analysis and so on, we really don't take it all across the board. We do tend to keep it this simple. So we don't need 50 entry methods. We really only need a couple. The more important part is being able to read the market and understand, when and where we want to execute in accordance with. Okay, so first we're going to talk about demand price patterns. Price briefly consolidates after moving higher, and that's building compression, right? So what it's doing there is moving, as you can see. So again, let me just kind of back it up here. So when price is moving higher, and this is an important distinction, of course, all of this will make sense, but I would also maybe encourage you to go back and review this if you don't mind. That way I can progress rapidly and not waste, too much of your time with something that you can easily go back and reference. So what we're doing here is we're simply talking about demand, not supply, because they are very different. So demand patterns, price briefly consolidates after moving higher, right? So you can see here that clearly price has moved to the upside, and then it begins to go sideways. Okay, so that sideways is what we call compression. And the buy orders, because remember, we're referencing demand at this point, they begin to accumulate inside of the consolidation. Okay, so in other words, inside of the rectangles that you see there, that's where the buy orders are accumulating. And we know that they're accumulating because price is unable to decrease. In other words, it can't go lower, right? So that tells us that the buyers are indeed fighting back. Okay, so continuation occurs due to the consumption of the sell orders. So as we said, it's accumulating on the buy side, right? So as they're accumulating, in order for a transaction to occur, that's to say, in order for any order to accumulate on the buy side, it does have to meet an equal seller. right? So if someone or an entity or institution, whatever, but if they want to buy at 100, you have to have someone willing to sell at 100, right? Or better price. But of course, you have to have, you can't go out and buy a 57 Chevy if there isn't one that you can find for sale, And so that's the same thing here. So we do understand that, as I'll just repeat here, continuation occurs due to the consumption of the sellers. So there's two different words at play here: accumulation and consumption. We're accumulating more buyers, and that's not abundantly clear yet. We'll get to that in a moment, but we are accumulating on the buy side. We know that because we can't go lower, and we're consuming the sellers because of this right here. Now it's abundantly clear who accumulated and who got consumed, right? So inside of that rectangle, when we begin to go sideways and we can't go any lower, we cannot, in other words, we can't go down, we're going sideways. That's because the buyers are there and they're saying, no, this is the floor. This is, you're hitting a brick wall, if you will, and we're not going to allow it, okay? So that's great. We know they're accumulating. We know in order to accumulate buyers, sellers have to be getting executed as well. Therefore, they're being consumed. But then it's this move right there. That's the one that really tells us, factually speaking, overall, in its entirety, we accumulated more buy orders and consumed more sell orders. I'm not going to spend as much time on each slide, but I felt that this one is relatively important, as they all are. But then if you just flip this for supply, right? So that's why I feel that I don't need to spend a lot of time here. Supply, is just inverted. So flip that over. In this case here, where price is briefly consolidating, looks like we just got an order filled. I had one out there. I was hoping to get out there before it got filled, but that's okay. We're going to spend some time on the live charts. I don't know if you just heard that or not. That was my notification. Lovely NinjaTrader notification there. It's always good to hear. So again, just invert this. Supply patterns, it's consolidating after a move lower. As you recall, demand was after a move higher. They're building compression, so on and so forth, moving down, moving sideways, accumulating and consuming. Okay, and then we find out who wins that battle, right? So now we know in this case, supply exceeds demand, or sellers accumulated and buyers got consumed. Okay. All right, so those are some very basic patterns, right? That's what I was trying to tell you. These are very simple, but once you see how to use them, when and where, it becomes so very clear that that's all that we need. I literally can do just about any trade all over the place, any time frame. It could be a daily time frame, a 3-minute chart, etc. And I can use that same exact style. And again, as you just saw, there was only two, right? A supply and then a demand type of level. There are a couple of others, but let's just stick with these two today. These are, by the way, the ones that we use predominantly, okay? All right, so now that we have the patterns, we're going to talk about qualifying them, and we want to ask ourselves some questions in order to first and foremost qualify those levels. Did price depart from the consolidation fast or slow? Okay, so that's what we're questioning there. When we left the area, how did we do it? Was it fast or was it slow? The speed and the distance helps determine the strength versus the weakness. Fast equates to strong, slow equates to weak. So in other words, we want to leave the area, but we want to do it abruptly, right? So again, the faster we can do that, the better off it is going to be, because it displays, I don't want to get into the actual underlying order flow too much of it. We could complicate things and spend a little bit too much time on that. But suffice to say, remember who's getting consumed, right? So if here in this particular case, on the left side, that is, actually, let me see if you can, let's do pointer options, visibility, I think it is. Okay, visible. So in this one on the left side, this is a supply level. Remember, we're going down, sideways, and down. And the faster we go, what's happening, let's say underneath the hood, okay, metaphorically, is there simply aren't enough on the buy side to stop it, right? So the faster it goes down and the further it goes down, that's an indication we already know where the sellers are. So now I need to be shown where the buyers are. And that's what this is doing. It's departing and it's going down, and wherever it stops and then starts to come back up, that is where we now know the buyers may be as well. Okay, so I don't want to dive too deep. Again, tomorrow's session, I'll dive as deep as you want to go into this. Okay. All right. So just remember, the speed and the distance helps determine the strength versus the weakness. Excuse me. Fast is strong, slow is weak. The next question we're going to ask ourselves is how many bars closed while inside of the consolidation before departing. Remember, that's where we talked about the orders accumulating inside of that rectangle. Well, that's what we're referring to here. So if we put that on the chart, simply asking how many bars did it take? So let's say that a different way. You know, how much time did it take, right? Ultimately, that's what we're asking. We predominantly trade on time-based charts. You could trade tick charts, volume charts, you know, it doesn't matter, but that's what we trade. So for us, it's pretty much always a matter of time. And that's why we don't ask ourselves the question, how much time is closed inside of the consolidation? Because again, we may be, you know, maybe looking at a tick chart or a volume chart, something to that extent. So we want to know the amount of bars because everything is relative to that type of chart, right? So this just makes a lot more sense. The longer, well, actually, I'm putting the cart before the horse, Will. So the number of bars indicate how decisive the buyers and sellers were at the time of formation, okay? So in this particular case, as with all, fewer bars equate to very decisive. That's a good thing, okay? Many bars, not so much. Give me a big frown face on that one. Not very happy about that. So if we have a bunch of bars, what does that tell us? It tells me that it was very difficult to make a decision. And if I'm trading based on something that, you know, we would use words like, you know, trying to give myself an edge or probability or something to that extent, isn't that the exact opposite? I'm removing the edge. I'm removing the probability, right? I'm saying, you know, look at this pattern. In essence, this pattern is telling me that it doesn't really know what it wants to do, right? So again, too many bars and or the more in general, not so much. That's as I said, a big frown face, okay? All right, and then we want to know how to count those. So if we go back to those questions, we talked about, well, let's just say the qualifying questions. Part of qualifying was how many bars are inside, right? So we need to at least touch on real quick how to count those bars. So what we want to do is determine the highest high after price moves up, okay? And then we want to adjust to each new consecutive bars high that forms. So quite simply, we have a new bar. That new bar made a new high, right? So what I want to do is get rid of the previous one and adjust, excuse me, and or adapt to the new bar high. And I'm just going to keep doing that, right? I'm going to rinse and repeat that process over and over and over again. And then we're going to count the high bar. So it's always going to be bar number one, okay? So previously, that may have been bar number one, right? I mean, it's absolutely, because it's the high bar. So that's bar number one until it isn't. Now that's bar number one, right? Until it isn't, or we know that it does indeed become the actual high bar. So when I count the high bar plus each bar which fails to surpass the high bar's high, okay? So now we have bar number one, we know. There we go. So that bar fails to take out bar number one's high, ergo we have another bar, right? So bar one, bar two, bar three. And as I said, as long as it fails to surpass bar one's high, we continue counting that bar. So this bar, we do not count. Okay, so that's what we call it, like a go bar, if you will, right? So we would have a 3-bar departure. All right, we're just going to give you another quick example. We have a bar high, we have another bar high. Okay, so we keep adapting. Another bar high, adapt. Bar number one, bar number two, because it fails to take out bar number one's high. Number 3, 4, 5, 6. And we're continuously counting, as you can see here, until we aren't, right? So the bar that takes out that high, that becomes, you know, the departing bar. In the left, of course, we have a 3-bar departure. Number 2 or on the right, we have a 6-bar departure. Those are very important. Remember that distinction. The more, not the merrier, right? As the expression typically goes. All right, very good. So how to count the supply bars? Just invert it, okay? Literally just take that and go down with it. So we're looking at the bars low. We're going to keep adjusting to each new bar's low. That's going to become bar number 1 until that bar is no longer taken out, right? Until the low of said bar is no longer taken out. So then we begin counting 1, 2, 3, depart, okay? Give another example here. Bar low, new bar low. So this becomes bar number 1, right? New bar low, remove, adapt, bar number 1. Bar number 2 fails to take out bar number 1, so on and so forth. And we continue counting. 1, 2, 3, 4, 5, 6, depart. Okay, so we don't count that final bar. The reason we're telling you this is because this is our way of doing it, right? And everything in our training, it's our way of doing it. Now, that doesn't mean, let me be very clear about this. There is no our way or the highway. That's kind of a silly statement when it comes to trading, because there's so many amazing traders. There's so many amazing different ways of doing things. But quite frankly, when you find something that works for you, that is your amazing, right? I mean, so why would you go changing that? We wouldn't. And we found, that there's a reason that we do it the way that we do it. Let's put it that way. Okay. All right. I won't go any further than that. Okay. So the final things that we're going to talk about is something a little bit strange, but sellers cause demand levels. Okay. Well, that is weird, Will, because here the whole time I've been taught that buyers cause demand, that buyers are demand. So give me just 1 second here. I have to keep my throat hydrated. Had a little bit of trouble with my voice here recently and had to, luckily it worked out for the event though. So I'm very thankful for that. So yes, absolutely. Buyers are demand, folks. That's not in dispute here at all. You'll understand in just a moment. So sellers cause demand levels. So that, again, we're not saying that sellers are demand levels. No, of course not. So price stops moving higher when sell orders are reached and cannot continue higher until 100% of the sell orders are consumed, right? Remember, again, I'm moving really fast. I get it. This may be like speaking a different language to you. It should be, in fact. And so please just feel free to reference it, go back, review it, and maybe slow it down a little bit. Okay. So again, price stops moving higher when the sell orders are reached and cannot continue higher until 100% of them are reached. So if we reach a price point of 100, it is a fact that we cannot go above that until 100% of the willing sellers at 100 are no longer there. Their orders have been filled or executed. They're gone, right? Because we just went above it. They have to be. That's just the way the markets work. So maybe this will make a little bit more sense here as I move forward. The high bar in a level indicates where sellers were reached, right? Okay. In other words, where did we stop? Where did we fail to go higher? We know that has to be where sellers are because, again, we couldn't go any higher. So the consolidation followed by continuation confirms there were not enough sellers to reverse price's direction and new demand accumulated. Remember, we talked about that pattern before, but we're just diving a little bit deeper into it, okay? So right there is that proof in the pudding, so to speak. The consolidation, I'm repeating this, followed by the continuation confirms there were not enough sellers to reverse price and or price's direction and new demand accumulated. Kind of said the same thing from the start, right? This pattern in and of itself is a demand style pattern. It indicates further consumption of sellers as well as further accumulation of buyers, okay? So the buyers cause supply levels. This will make more sense as I move out to support and resistance. But again, just invert this, okay? So we talked about supply and or sellers. Think about the buyers. What are they doing, right? So if we have a drop in price, price stops moving lower when the buy orders are reached, right? We have to. That's just how it functions. If you go down, I don't care if there's one order, you can't go lower until that order is consumed, right? I mean, so that's a factual statement. It's also exaggerative, especially if you're trading what we're trading, which is like the S&P. So to even say that there's like one order stopping prices. Well, there's a lot more than that, suffice to say. Okay. But we do know at least we hit some and or maybe a bunch, because eventually price is going to reverse, right? So there's always going to be a low bar. There's always going to be a low bar. Could be more than one if you have an exact, double bottom or top or something like that. But ultimately, there's always going to be a bottom and or a low bar. Okay, that's just how it works. So the low bar in the level indicates where the buyers were reached, as I have continuously said. And the consolidation followed by continuation confirms there were not enough buyers to reverse price's direction and new supply accumulated. So you see what we're saying here? The buyers obviously are not the supply, but in order for the supply to display itself and open the curtain, so to speak, right? Give us a peek behind the curtain. In order for that to happen, we have to know where those buyers are, because if we don't, there's just a bunch of red candles all over the chart. That gives us no information, no footprint, if you will. There's really no, you can't even mitigate your risk, right? There's no specificity, if you will. So that does us no good. We want to know where the buyers are so that we can then determine where the sellers are, okay? How do we do that? Accumulation, consumption. In a supply level, if you will, accumulate sellers, consume buyers. Prove that to me with this, okay? And therefore, we've concluded the pattern. All right, so these slides, I'm really going to move super fast because I want to make the Q&A as well. But basically, and I'll dive into this a little bit further into maybe our session tomorrow. Okay, we have very specific areas of location for these, and it's all about location. Real estate has it right, location, location, location. So we want to locate demand at resistance. And again, I'm just going to have to skip through this. This is simply too much to cover for what I want to get to. And I will just define this real quick. We want to locate supply at support. Okay. So demand at resistance, supply at support. This will make a lot more sense after tomorrow. And I'll give you just a visual here. Okay. As price is dropping down, when it hits support, that's how we know where the buyers are. The beautiful thing about this is that we can actually predetermine where they're most likely to be anyway, okay, using our levels and so on, our software. Okay. And then the next question is, are we actually going to rally from there, like a reversal, or are we going to form a new supply level and consume those buyers, right? Very important. I can't even tell you how important this is. I could go on and on about it all day long, but given the time, I think we should move on to what I'm super excited about. All right. So demand at resistance. We'll go over these tomorrow, as I said, supply at support. These are just different types of support and resistance. Okay. And now we're going to get to something super, in my opinion, super cool. So the PFAZoneSuite, I'm not even going to do it justice here. Suffice to say, guys and gals, it is far more than an indicator. It is a plethora of, I'm actually, at this point, I don't even think I can count the algorithms. Oh, so many. But it is a suite, and that's why we call it a zone suite, right? The premise of it is absolutely built around supply and demand and so on, but there's so much more involved. This encompasses our entire methodology and allows us, and then not just ours. I mean, there's, the majority of methodologies, actually, there's a tool inside of the suite that would most likely be advantageous. But I'm going to stick to the order management because, in my opinion, the order management side of what we've been able to accomplish is worth it in and of itself. So I'll explain that. So that's the PFAZoneSuite. It's a tool that we've developed over a decade plus, and we're very proud of it. And I honestly cannot trade these days without it. I'm joking, I could, but I certainly will not. Okay, so these are just some of the multitude of data points that are built into the Zone Suite. You can see, but I'm going to skip through all of this. Again, we can kind of touch on that tomorrow in the session. And let's just go ahead and get out to the live charts. We'll move through this. That was the presentation. Tomorrow, please reference that second link again, the PFA free events. That's where you can sign up for this right here. We'll have that tomorrow at 10 a.m. Eastern Standard Time. Please be there. I really do think that you'll enjoy it, and we'll place as many trades as you like. You just have to ask, and we'll look at different markets, whatever you desire. Okay. All right. And then of course, I'm going to go ahead and get this out of the way because as I was actually joking with the guys over at Ninja before the event in relation to my amazing sales efforts here. I'm joking, of course, but yeah, let's go ahead and do that. So I'm going to throw this out there. If you use the code Ninja event, all right, this is not going to happen again. I can tell you that, as far as discounts go, this is going to be the extent of it for this year, and we're essentially kind of backing off on that anyway. But always, when we come into the NinjaTrader ecosystem, it's just part of what we're going to do because we feel there's such a great relationship there that we want to offer that. So the offer, if you will, again, the discount code right here in the bottom left is just Ninja event, capital N, capital E, no spaces. And actually, I should have shared those links with you. Feel free to let me know and I can send them to you. No, actually, maybe I did. Yeah, I did. I'm sorry. That's the PFA software. You'd want to click the third link. Okay. So typically the pricing is $14.97 plus our hedger. I'll go into what this is tomorrow. It is for what we do. It has been one of the best things since sliced bread. I mean, it's just, we have the ability to submit orders to different markets from the corresponding market. Not only that, but we can hedge against positions all from one chart and one market. It's anyway, again, in our opinion, it's a lovely feature and we use it every day. So with this, typically that would be $19.96. Okay, so we're just going to knock it down to $13.97.20. So fairly big on the discount there. Again, Ninja event being the code if you want to just copy that down. Okay, so that's the software license only. Lifetime license, you can read through all of that at your leisure. And the second thing that we're going to offer you all, if you're interested in getting in our community, the community is where, of course, the software is included in that. But you also get all of our, the training, you get to be a part of the community, and we're the ones who are really lucky. We get to have you in the community. But essentially, this is where we take you and we train you up on all of A to Z. Okay, so that's what the community is designed to do. Again, it includes the software because the software is, it becomes a necessary part. I shouldn't use the term necessary. You can do this manually, of course, but as I said before, at this point, it's pretty necessary for myself, just for efficiency purposes. Okay, so those are the offerings. The community yearly, you can get typically $19.99, be $15.99.20 today, and then the lifetime, which we even actually it would be more than that. I'm not sure how we did a typo there. It would be 54 something, I believe. That's okay. So the lifetime community plus the hedger will include all of that for only $39.99.20. Okay. All right. Very good. So let's get out to the charts and we'll go ahead and have some fun with that. All right. So let's actually, I know how I can do it most efficient. All right, so here we are. Let's talk about some features, and don't have a lot of time, but I am so excited, guys and gals, because this is something completely, well, I would just like to say it's amazing, but that's my opinion. I'm going to have to refrain from the jokes too much. So what I'm going to do is just close this out, if that's okay. And the only unfortunate part about this is we're not in real time. So we're not going to see things update as they should. The markets are closed, right? So that becomes problematic as far as the software updating and so on. Tomorrow in the live session, you'll see everything will be instant because, because the markets are open and so on. I don't know how much you all know about the code and NinjaScript and things to that extent, but there are update processes and you have to kind of trigger them in order to force some updates and things like that. So anyway, no worries to bore you with that. But suffice to say, let's just give you an actual example. That'll be the best way, I think, to do it. So I've always had these issues about, look, I know where I want to be the buyer and the seller and all that good fun stuff, but what happens when things occur in the overnight? Or what happens when I make a plan and then I really need to go do something, or most importantly, I just need to remove myself from being in front of the computer, right? Why? Well, because I'm a human being and I'm emotional. So there's many problems that that go with that, right? So here's what I'm going to do. Let me close this. Okay, I'm just going to close it. It's irrelevant. It doesn't really matter. I was just trying to get it done for class purposes. And right now, what I'm going to do is remove the zones. As you can see, we fluctuated back and forth. We're on a 60-minute chart here, but it's okay. I'm going to go ahead and remove these. You can see the lower level zones here, how we've turned, as well as yesterday. This is where we rallied from just yesterday. And we had this very large move up. We actually anticipated, so yesterday we were on the buy side of the market. I could have, I never could have predicted this, right? But again, if you go back and review our recordings of our live sessions, you'll see very specifically I was referring to wanting to be a buyer yesterday, not a seller. And then again today, ironically, I wanted to be a seller, not the buyer, right? Until later in the session. So it kind of goes hand in hand with buy low, sell high. But let's say that for all intents and purposes, I'm just going to throw some hypotheticals. I want to be a seller and I want to do it now. Okay. But I have a very specific way that I want to do that. And I need to do it in a specific location. Okay. So what we've done is we've implemented, I'm going to turn these off to make this very clear. Now, all of it's very important, but right now I just want you to see the order management side. So let's say that, you know what, I want to be a buyer. Okay. And remember those patterns that I showed you before, those supply and demand patterns that we discussed earlier, the accumulation and so on and so forth. Okay. So that's essentially what we have on a chart. So let's pretend that we have one right now. Okay. Well, actually we do have an RBR right up here, but I believe that's going to disappear. I could probably find a better one, but given the time, I'll just make this. So let's pretend that we have that exact pattern that we're looking for. Okay. What I can do is I can go here and I can specify that I want to buy on an RBR. Okay. So an RBR is that demand pattern that we were previously looking at. So I can toggle that on and it's going to go, obviously right onto the RBR. Okay. Now, if there isn't an RBR, it's going to focus on current price and it's just going to continuously keep looking for one. All right. So a lot of bells and whistles here and too much to talk about in a short period of time. That's why I want you to go ahead and click that second link so I can spend as much time as necessary tomorrow. So with this, what if I want a bracket order? Okay. So I have a bracket order. It's called OCO. I can turn that on or off at any time. In this case, I do want a bracket order, right? Okay. But, I could tell you where it is. It's kind of hiding down there, right? So if I scrunch the chart up, you can see all of that. Okay. But I know where I want to be the buyer, but I need to make sure that it happens in my specified location. So what I'm then going to do is I'm going to go turn on or toggle on what I call the entry zone. Okay. The entry zone can be manipulated anywhere on the chart. And in this particular case, I'm looking for an RBR, which is a demand style and or buy pattern. But I don't want it to happen just anywhere, okay? I want to specify the exact area that I want that to occur, okay? So in this particular case, what I'm doing is I'm taking the entry management zone or the entry zone, otherwise the management zone. And again, you're not seeing any updates here because of the markets being closed. Tomorrow, what you'd see is the instant. So this stop would instantly move, right? As soon as I move this, it would instantly move and so on and so forth. Okay. But just during the mark to market and all of that stuff, it's not going to, data is dead, if you will. Okay. So right now, suffice to say, what I am telling the entry of sorts, I said, I want to take an RBR. I need one. I want to be the buyer. Okay. But I don't want to be the buyer after a big move up. In fact, I want to do the exact opposite. I want to be the buyer after a big move down. Buy low, sell high, right? So what I can do is I can literally specify the location that I require the entry to be, else the entry will not take place. So let's give you this hypothetical here, right? So let's say that I wanted to be the buyer. Absolutely. Because I do. This isn't in real, I actually do want to be the buyer, but not right here. Okay. So let's hypothetically say I know exactly where I want to be the buyer. And it's right down here. Okay. So what I can now do is I can take and specify exactly where I want that to be. And I've said right now that I want to take an RBR, but even if I go in and submit this, it's not going to execute the order because it's outside of my entry zone, right? So what I'm saying is, look, I want to be the buyer, but I require buy low, sell high concept. And if you can't give me that, c'est la vie. And so again, we're kind of implementing requirements by if then else processes with the order management. And I can move this, I can manipulate it. It can be anywhere I want it to be. Okay. It doesn't have to be, here or here or anything. This is maneuverable and I can manipulate it any way that I want to, right? I could just move the zone or however that occurs. But right now, this entry is submitted. Okay. But no matter what I do, it is not going to be executed unless it's inside of this area. So now, as I said, I've required this to come way down and then take that any RBR that forms. Okay, now it's bedtime, right? I mean, I'm kind of joking, but not really. It's time for me to walk away from the machine. I've told this to do everything I wanted it to do. I can also go in and say, look, I don't want you, so let's cancel that. I don't want you to take an RBR, right? I want to buy the market, but for all intents and purposes, I may want to buy it down here or something like that. This can be a manual order. It doesn't have to require the RBR entry. Those demand zone or patterns that we looked at, those are not necessarily required. I can just place it anywhere I want it to be. So by doing that, I could simply drag the zone. I could say, I want to be the buyer, but I really want to do it down here in this area. And if the order is not in that area at the time of entry, then it's not going to place that trade. So I'm putting a lot of stipulations on this, and it allows me to just accommodate so much of what is actually necessary. I apologize, but I only have 1 minute and 30 seconds, it looks like, left. And man, I really want to do this and spend so much time on this because I have not even touched the surface of what the capabilities are here, but at least I got to show it to you. And I'll answer just a couple questions if I can get through. Go ahead and sign up. It's that second link up at the top, the PFA free events. And right now, if you have any questions outside of the ones I can get to in the next minute, go to our website, go to our contact us page, send us the questions, and I will absolutely get, anyone would tell you that knows what we do. We never leave questions unanswered, okay? All right. I've not, oh, great. Thank you for letting me know, Alexander. I've not received confirmation email from you. There is no spam filter in my inbox. Understood. But these days there's still, from time to time, if you would, please check your spam folder. Just give it a go if you don't mind. Or it's possible that the email may be typed in wrong or whatever. Tell you what, send an email via our contact us page. And as I was just saying, I promise we'll get you taken care of one way or the other. So no worries on that. If it's not in your spam box, please shoot an email and we'll make sure you get taken care of. Okay, what happens when when bar 4 takes out high 5? Okay, so that's a very specific question. TK, do me a favor, ask that one in the live session tomorrow. I will absolutely get it covered for you. How's it working in sideways market? I wish I could, I wish so bad I could let the others answer that question, but tomorrow in the session, I'll show you our actual, the trade analysis and everything that has occurred, and I'll let you be the judge of that for yourself. But I will tell you, great. Great. Are you going to post a recording? That was for Ninja. I believe they'll get to that. And then tomorrow, could you please go over the hedger? Absolutely, John. Absolutely, I will. Yeah, no, I'm definitely going to do that tomorrow. Thank you so much for that. And then the link for tomorrow, Barbara. Yeah, if you scroll up, I'm going to repost it for you. But if you scroll up, nope, that's not the right one. You should see it at the top of the chat. Just maybe post them all again. Ooh, I think I double posted. I'm sorry. Yeah, my bad. It's the second one there, PFA free events. And without further ado, thank you all sincerely for your time. Really do appreciate it. From the NinjaTrader ecosystem, as I said before the session really got started, in its entirety, everyone with NinjaTrader, everyone NinjaTrader brokerage, everyone just for taking the time out of your day for being here. I hope that it was beneficial And tomorrow, I'm very excited. I'm very excited. I look forward to seeing you there. God bless and thank you again. Bye for now.
All right, thanks again, Pure Financial Academy, for taking the time to share with us today. And if you enjoyed today's session, we hope you'll join us for future webinars. And we would like to remind you that the information provided in this was that of Pure Financial Academy and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.